If you want to know how to make $1,000 in a week with just fair value gap, all you need to change is your what? Mindset. So in this video, I'm going to show you how to do it. So let's go.
Hi guys, if this is your first time watching me, please do well to do what? Like and subscribe. So for you to earn with imbalance, you need to know what imbalance is, especially for new beginners traders. So I'm going to show you on the chart what imbalance is, but first I'm going to do a diagram, a rough diagram to explain what imbalance is before I continue on the chart. So let's see, we have a first candle here, let me say the second candle here, and a third candle. So what's imbalance? Imbalance is a gap between these two candles. It's a gap between this first candle and the second candle. So the gap here is what we call imbalance, is where the money is. So layman explanation is, let me say you want to buy a pair of shoes, maybe worth $10, and you don't have the $10 at hand. You told the owner of the shop that, okay, I'm going to come back tomorrow to get the shoe, and you come back the next day and the owner, the seller told you, okay, the shoe has gone up to what, $500. And you be like, but I thought it was $10 yesterday. The owner of the shoe, the seller of the shoe will tell you that no, it has gone up to $500. Okay, you be like, okay, I can't buy this shoe for $500. You're about to walk out. He now called you back and say, okay, come back. Okay, can you take this shoe for $20? You be like, okay, I have up to $20. You see, the owner of the shoe have what? Brought down its price. Same thing with imbalance. Price impulse down. You understand? From here, with making price more costly. So what do we have to do? We have to wait for price to rebalance itself. Let me say, come back to rebalance itself. This is a candle. This is a great candle. Let me make this like this. First one here, second one here. So this, between this purple line is our imbalance. I don't want to confuse you guys. So okay, so between this purple line is our what? Imbalance. This is here. So price had to come back into this place to make it more cheaper for us to enter. Now it becomes more cheaper, so we can now enter from here to target our what? External liquidity, which is sitting down. Let me make this purple, or maybe more strong purple. Okay, this one will go. So price will have to come out, take out this our what? External liquidity. Do you understand? So price tap into our what? Imbalance to do what? Deliver back to our external liquidity. So its imbalance is where price is cheaper. You understand? After price left with impulse, it have to come back to make us enter. Understand? So how do we enter? We enter when it's cheap for us to enter. So using my example of the $10 to $500, now we can buy here. Put your stop loss here. Remember, this third candle, this is a 1, 2, 3. It's always a 3 candle. So the third candle, it's what? A liquidity. It's always a liquidity. So the third candle is a liquidity for us to enter. So I'm going to show you example now on the chart. Let me delete all this. I'm going to show you example on the chart so you understand. want to show example on the chart. I'm going to be focusing on our weekly time frame for this class, YouTube class. So see, I've already marked it here. So I will delete it. I will start from the first one. I'll delete it. So remember, 3 candles. So what are we looking at? This is the first candle, second candle, and the third candle. So in between this candle, what are you seeing? The gap. Remember, week. There shouldn't be the first week. The first week of the first week candle shouldn't touch the last week candle. You understand? So the gap in between these 2 candles are what are imbalance, which is here. You understand? So price has tapped into our imbalance and they will deliver back to our external liquidity. Remember, this our third candle is always our what? The internal liquidity. So it's a double confluence. You understand? A double confluence is our third candle is our liquidity. So it should be taken. It should be taken and deliver into our what? Our imbalance or our FVG. You understand? So you see that price tap into it and it will deliver back to our external liquidity, which you can find every day on the chart, every week on the chart. You understand? But I'm using the weekly. But price is fractal. You can do it on the 4 hours, on the daily, any time frame. So let's enter the second what? Example. This is 1, this is 2, this is 3. So you can see that this week is not touching this week. So in between this week, you have a what? A fair value gap, which is here. You have a fair value gap. So what the price do? Price took out this third candle as what? Liquidity, and tapped into our imbalance. You understand? If you watch, you see that this last candle didn't take out this third candle. You understand? It can give you a false signal. So you have to wait for most of the time. Price should take out this third candle, deliver straight into our imbalance or our FVG, and what? Back to our external liquidity. So you can just very simple. You just have to, what you have to do is just study, back test, and understand it. You can just put your stop loss below this our main FVG candle, then it can tap into it and deliver to external liquidity. Same thing with here. Same thing with here. Look at it. You can put your stop loss there, maybe here. You understand? If this is a huge stop loss, I'm just example, not that you can be using weekly to enter your trade. I'm just on weekly time frame. So let's enter the bearish scenario. So you can see, let me delete this. This is the first candle, this is the second candle, this is the third candle. In between this candle is our what? Our FVG. I know you got it right. Our FVG. But can you observe something? Price didn't come. This our candle here didn't tap into our what? FVG. Where I'm going to teach you how to do what? Trade that in our next class. So let's step over to our next example. This is the first, second, this is the third candle. So this becomes our imbalance here. What the price do? Price tap into our what? Imbalance or what? And deliver to our external liquidity. So only with this you can make him $1,000 a week with just this strategy. You don't need all those fancy stuff that all these mentors are putting online. Very simple and classy. You don't need to overwork yourself. You don't need to think about it. You don't need to just stress yourself. And again, in the next class, I will teach you guys why order block is a trap. Yes, order block, you can trade off order block, but it's not as effective as what? FVG. FVG is very effective. You understand? Other blocks serve as a trend line liquidity. You understand? Because price will tap into our order block like 2 times or 3 times before it fails. But FVG sets the trend. It sets the trend. But fair value gap is order block is the point for reversal. Just take it from me. You can backtest it yourself, but I'll teach it very well next class. Order block is the point for what? Reversal. You understand? So until next time, see you guys.